This is Alan Bush with ADMIS. In the stock index futures, seeing yesterday's sharp declines linked to ideas that the fiscal cliff will take hold. Apparently there is limited progress in resolving that situation now, so some negative feelings there pressuring stock index futures sharply yesterday. This morning we did have jobless claims coming in with a very sizable increase. This was somewhat unexpected, although it should have been anticipated with the impact of the Hurricane Sandy that of course resulted in some job loss. We do have Bernanke speaking at 12:20 Central Time. From here, I think we can see lower prices for stock index futures. We have taken out some very critical technical points. Also, I think in the longer term, we can see this pressure continuing through the balance of this year and well into next year. Over in the currencies, we have the euro currency trading higher, even though we do have news that the euro currency was temporarily impacted by some somewhat better than expected news as far as some of the countries in the eurozone showing better than expected GDP. But on balance, we have the euro block showing negative growth for the third quarter, coming in down 0.1%. From here, I think we can see lower prices for the euro currency. A lot of political problems and economic problems remain. We also are looking for lower prices in the British pound. We did have retail sales coming in a little bit on the negative side recently. Also looking for lower prices in the Swiss franc, which generally follows the currencies in the euro area. The dollar index is higher this morning, and I think we'll see continued strength today and longer term for the US dollar index. And credit markets a little bit easier, even though we did have some bullish news as far as the jobless claims, that being a bullish influence showing such a large increase. Also with stock index futures a little bit firmer early today, that a bit of a bearish influence. But don't forget, we are very close to contract highs in the 10 and 30-year Treasury futures. And I think as the fiscal cliff gets closer, I think there will be more and more reason for investors to seek safety in the Treasury futures markets. So from here, look for higher prices across the board in the credit markets. I think this is a trend that is likely to last well into next year. Once again, these are my opinions alone and are not opinions of ADMIS or Archer Daniels Midland.
Fed really wants to be perceived as independent and doing the right thing each month.